Yo, what's going on, guys? It is Colton here, and I have really big news today. So the Federal Reserve is widely expected to cut rates this fall. Now, this rate cut might start happening in September and go throughout the next 6 months. But will this actually revive the housing market, or are we past the quick fix? Today, I'll break down what Powell said and how it affects investors, homeowners, home buyers, the sales and inventory of the housing market, so definitely stay tuned. At Jackson Hole, Jerome Powell suggested that rate cuts are very likely on the table for September. Markets are now pricing in about 85 to 90% chance of a quarter point cut. But here's the catch. Powell also said that they'll remain data dependent. Now, this pretty much means the job market can still have an impact on when we'll receive these cuts. The numbers still remain hot. We're definitely going to see a stop or a halt to the fast line track of rate cuts. So Wall Street is optimistic, but are we really? So let's take a look at the housing market. In July, new single family home sales actually fell about 0.6% to about 652 units. That's the second straight month of decline. Inventory levels are creeping higher, but affordability remains the same even with the slowdown. Median prices are softening up about 2.7 year over year, much lower than the 15 to 20% surges we saw in 2021. So that the market is cooling, but now in a way that makes the home dramatically more affordable. I'm gonna be explaining how the housing market is stuck in a very firm bubble. Number one, low supply. Listings are still 20 to 30% below historical norms. Many homeowners are sitting on a 3% mortgage rate and won't want to trade up for a 6.5 mortgage. That's the classic lock-in effect that we see around the whole nation. Number two, rising construction costs. As we saw in COVID, wood prices, everything skyrocketed up. They've actually stayed pretty high. They haven't really come down. They know that the construction companies and home buyers are still going to be paying the premium cost, so they don't have to lower their cost of what they're supplying. Another implication are tariffs. Tariffs are completely unstable right now. We don't know when they're going to hit. We don't know when they're going to be taken back. So cost of goods are traditionally higher when something like this happens. And this is a tricky demand issue that is one of the reasons why we're seeing the housing market kind of stuck. So the question I want to ask you guys, and I hope to answer it, and maybe you guys can have a different opinion and challenge what I'm thinking, but will the rate cuts actually change for the better, or is it just kind of a mirage? Is it just a face that they're putting on to try to help themselves out? Now, mortgage rates could definitely dip to probably around 6% by the end of the year, which is much better than the 6.6 that we're seeing now, but it's very far off the 3 to 4% that we had for a little bit, and a lot of people dream about, but that's very unlikely to be seen again. Long-term rates like a 10-year treasury yield are driven by the global markets. If investors stay cautious, mortgage rates may remain sticky, even if the feds cut the rate. So yes, lower rates will help the margins, but it won't suddenly make the housing market cheap again. If anything, the lower rates will drive prices back up. Now, not all regions are the same. So I'm talking broad United States, and maybe where you live, you may see a different trend or pattern. So definitely let me know below, and maybe I can make a quick video about it. In places like the Gulf Coast and Mountain West, investors are building up faster, so the buyers can see more negotiating power. Meanwhile, the Northeast and Midwest remains tight markets with very few listings. For investors, history shows that real estate mortgages, REITs, tend to gain about 2% for every 25 base point Fed cuts. Sectors like healthcare REITs and net lease properties are considered defensive plays if the Fed cuts are slower than expected. So, time to wrap it up. Rate cuts are coming. We definitely know that. It's 85 to 90% likely that we'll see the first one in September. They'll help at the margins, but will the affordability actually come down? We really don't know yet. Buyers may get a sigh of relief when they have a 30-year mortgage that they're signing, but definitely don't expect the 2020 rates that a lot of people locked in. The big question is, will this rate cut be the difference to unfreeze the stagnant market that we are in? Drop a comment with your city down below, and I'll do a deep dive and make a video about what I see and what trends that might be coming up by the end of the year in your market. And with that, I'm a very small channel. I would love for you to subscribe and like. It will help the algorithm out a bunch. I want to keep posting these videos to educate people on what I'm seeing that might not have the time to do a deep dive into the market. This is something I'm very passionate about, I love doing, so please hit the like button and subscribe down below.